Godrej Consumer Products held a virtual analyst meet after the new CEO Sudhir Sitapati took over with an objective to put in place the new roadmap, his aspirations and strategies. We remain optimistic about the growth plans through higher category penetration and focus on core portfolios. In the short term, management does not intend to enter into newer categories. Two factors currently impacting GCPL are high raw material costs and lower growth in Indonesia. In terms of raw material inflation, crude oil has risen to $80 per barrel from $40. Palm oil has risen from 1500 Malaysian ringgit per ton to 3500 Malaysian ringgit per ton, and tin prices have increased from $18,000 per ton to $36,000 per ton from November 2020 to November 2021 respectively. GCPL plans to calibrate the price hike and expects value-led growth in the forthcoming quarters. Indonesia business saw weakness on the back of weakening macros and some company-specific issues. Management agreed that the Indonesian subsidiary has not invested in the core portfolio, which made it vulnerable to increased competition, which led to subpar growth. The near-term outlook for Indonesia continues to remain challenging, and it remains confident of its revival given the steps it has undertaken. GCPL maintained its guidance of growing volumes in double-digit led by higher penetration across categories, margin expansion of 150 to 200 basis points and better category-level collaboration across geographies, cost-effectiveness and focus on category development. GCPL was not able to drive category development beyond 20-25% penetration. Household insecticides, hair color and air fresheners are all under-penetrated categories which offer a lot of promise for growth. GCPL plans to increase advertisement and publicity spend to drive the next leg of growth in these categories. Currently, these categories have a penetration of about 10 to 30%, which they plan to bring to 50 to 60%. In case these category development initiatives are done correctly, GCPL will be able to see the results in the next 1 year. Management believes there's a lot of room for category-level collaboration across India, Africa, and Indonesia. The company will have to focus on cost-effectiveness. The savings would be deployed to support brands through advertisement and publicity expenditure. GCPL plans to expand its India health and personal care portfolio from 4 categories to 10 segments. The management plans to focus on the core portfolio as of now and fewer but bigger innovations. GCPL's new mantra is to shift away from doing too little of many things to a lot of few things. GCPL will improve the quality of its distribution strength as well. It currently remains urban-centric and there is still room to go deeper. According to the management, even Africa and Indonesia have scope to strengthen the distribution network. Focus on premiumization has taken a backseat for some time, and at an appropriate time, the management will unveil its strategy for the same. We've downgraded our FY22 projection while upgraded our FY23 numbers. Based on our projection, GCPL is trading at a PE multiple of 44x FY23 earnings. Investors with a long-term view can accumulate the stock and add on decline.